Alright everyone, Cowboy Trades here. Welcome back to the channel for another update on Bitcoin and the SP 500 post FOMC. So, as liquidity conditions continue to get worse in the markets, we're witnessing smart money sell into the most recent Bitcoin and SP 500 rally. What has this previously mean for the SP 500? What does this previously mean for Bitcoin? And what is next for both of these markets? Well, let's dive into this today. We're going to start off with Bitcoin and then we will update with the SP 500. So since our last Bitcoin video 4 days ago, we outlined in a 23-minute long video why we believe that this is going to be the top for Bitcoin and we're going to start coming down to the downside. Now, the SP 500 has actually started to nuke like we predicted since the FOMC, and Bitcoin really hasn't budged too much. If we do come over to the daily, you can see this is exactly where the FOMC came out for Bitcoin. We had this doji candle, we chopped down, we chopped up, we chopped back down, and we're at the exact same price as we were. However, in the lower time frames, you can see Bitcoin is starting to show a little bit of weakness as we are making lower highs across the board. If we do look at this, you can kind of see that we are kind of just consolidating within this triangle pattern right now. This triangle pattern has an apex around about the 15th of May. So all in all, in the higher time frames, the Bitcoin analysis that we're going to present is going to be pretty quick because I do just want to update. Obviously, in the higher time frames, nothing's changed. We're waiting for this major box to have a decision. As you can see, like we've discussed before, this was major support throughout the entire distribution phase at the top of the bull run. We've come into this and it looks like we're going lower and lower while we do have the stochastic RSI screaming that we're overextended and we should be heading down. Really, nothing's changed. We're still waiting for a major close beneath 28,000 until we get, weekly candle body closes and get continuation with volume confirming the breakdown beneath 28,000, or on the flip side, if we get a major flip of 32,400 and start pushing to the upside, we really don't have a decision in the market. Expect a lot of chop to the side until this happens. I personally think once we start breaking beneath 28,000, that is where we're going to start moving down from. As you can see, total cryptocurrency market cap, we're still watching this major development of this rejection on the 618 Fibonacci take place. This is the monthly time frame. We are starting to show weakness with this red doji candle. Last month before that, we had a green doji candle. So right now, there's just a lot of indecision in the cryptocurrency markets while we are in this major area of resistance. In terms of the slightly lower time frame, if we do come over to the daily, you can still see this bearish divergence is taking place. Let me get rid of this green trend line because this has nothing to do with the divergence. As you can see, as we've been talking about, this bearish divergence is developing for most of the markets. We do have liquidity conditions continuing to get worse. The money flow index is becoming worse and worse. The OBV, also known as the on-balance volume, is becoming weaker and weaker while the price pushes to the upside. So what this really shows us is right now this is a retail-driven market. This rally is being caused by a lack of liquidity in the markets and just purely retail volume coming into an illiquid market environment. You can see the Bitcoin ratio of retail to institutional addresses. If we zoom in, literally yesterday, this made a new all-time high. So this is really a retail-driven market. Retail is rallying into this market right now. What happened the last time retail significantly bought up Bitcoin like this? Well, it was right here when Bitcoin was 46,000. This blue line, which is the retail to institutional addresses, just kept on running up. And this was the top of the market. If we reset the zoom and go back to, what happened in the bull run, you can see the blue line went to the downside because institutions were far more interested in Bitcoin. That's why we saw that massive push up to the upside with institutional money flowing in. Right now, blue line going up shows us this is purely a retail driven market. Because of this, we're seeing other on-chain metrics like the NVT, the network value to transaction ratio. This basically takes the Bitcoin price and divides it by the Bitcoin trading volume denominated in US dollars. So right now, we're having no shortage of volume in the market, which is why we're seeing a major push to the upside. But in terms of actual liquidity, please do bear in mind, volume and liquidity are two completely different things. A lot of traders don't know this. This is why I've made an update on this in my educational series. So if you still don't understand the differences between volume and liquidity, and you're like, well, how is the volume going up but liquidity is really weak right now, and you don't understand what that would mean for the market if liquidity is really, really weak right now but volume is really high, we get a lot of these whiplash reactions in the market. If you want to understand more about that, be sure to head over to my playlist. Be sure to then come over to the educational series, scroll down to the bottom, and you can see a video, a 10-minute video outlining the differences between volume and liquidity and what can happen in the markets when there's low liquidity but high volume. So I've outlined this in this video over here, so you can learn more about it if you want to. But all you really need to know right now is there's not a lot of liquidity. We're seeing retail absolutely FOMO into this market right now, and this is why we're seeing the NVT skyrocket. And if you didn't know, a high NVT suggests that Bitcoin is overvalued. You can see previously when we've had these massive spikes in the NVT, this is always lined up with major capitulations for Bitcoin. If we zoom in, you can see high NVT, bear market. You can see high NVT over here, double top in the NVT. As the NVT started to come down, we had a major move back down to the downside. You can see a spike in NVT over here. We had a correction, double top from this peak over here, and then we started breaking down into the bear market. And right now, retail is FOMOing in. We're seeing the NVT get overextended, and smart money is absolutely not interested in buying whatsoever. In fact, I can't really say that smart money is selling right now. Of course, they have been selling since the top of Bitcoin. You can see when we had this massive run up, they exited the market absolutely beautifully. They timed the top. But since around about December of 2022, they have been selling a tiny bit, but they're really just sitting on the sidelines. This is why there's not a lot of liquidity, but there's lots of retail volume flowing into the markets. Liquidity conditions are getting worse. And this is why we're seeing this divergence right now. We're seeing this bearish divergence against our liquidity conditions like the MFI, like the OBV. This is not a good sign whatsoever. In terms of the really lower time frames, what has changed? Well, absolutely nothing. If you have watched the previous videos, we have been highlighting, and also just very quickly, I do also want to highlight the OBV on most charts is actually looking worse than this. This is just one chart that I have to show the divergence. If you're coming over to a lot of other charts, you can see the OBV divergence is so much worse, especially over on Binance. You can just see on balance volume is absolutely dying right now. But let's get back over to the picture. If we come over to the daily time frame here, what's changed? Has this head and shoulders changed whatsoever? No. Like we talked about in the start of the video, these peaks are still becoming lower and lower, and this is looking like a beautiful head and shoulders with a price target. You know, obviously depending on when we break down, it's going to be slightly different, but around about 23,500 is the price target of this head and shoulders. As we've also discussed, there's a bar pattern down here at 19,600, and if we can find our CME chart right over here, I don't know why I've actually overlaid two different charts. These are pretty much exactly the same, but nonetheless, we do have a mini CME gap here at 24,900. We've got a massive CME gap down here at 20,300. Has anything changed whatsoever from these pictures? Absolutely not. You can still see this is beautifully developing, but you know, do bear in mind we're on the CME. This is currently closed. So when we come over to our previous chart, this head and shoulders looks a little bit nicer because we've got a brutal rejection starting to take place. So really for Bitcoin, just wanted to update some on-chain metrics here, because in terms of the higher time frames, absolutely nothing has changed. We are waiting for a macro decision, and this will be confirmed when Bitcoin either has a solid move below 28,000 or a solid move above 32,400. So here's where things get interesting. Like we said, not a lot to update on Bitcoin, so I did just want to update some charts we haven't, covered in a little while, some of these on-chain metrics, but here's where things get interesting. Let's talk about the SP 500, because like we predicted previously in our last video, we were letting you know that Bitcoin and the SP 500 are going to be having a major nuke after the FOMC. And in terms of the SP 500, the SP 500 actually had a disgustingly brutal week. If we come over to the daily time frame, up until the last trading day over on Friday, do bear in mind, always on Friday, traders sell volatility into the markets, and they always buy back that volatility coming into Monday. Prior to that, though, coming into the end of the week after the FOMC, we had about a 3.5% dump. In the higher time frames, though, you can see this S&P 500 weekly 5-wave symmetrical triangle looks like it's beautifully playing out. Obviously, you can see we've got a bearish 5-wave count into this, A, B, C, D, E. E wave, according to the falling market in these asymmetrical triangles, is where we're meant to top out. And if we zoom in, you can see we were so close to invalidating this wave count. If we look at where the top is right here on wave C, you can see I've put a horizontal level of resistance. If we broke above this, this would have been invalidated, but we came right up to it, and wave E is slightly lower than wave C right here. So this wave count is still beautifully playing out. If we do come over to the daily time frame, what you can see is we actually broke down into this. So this is looking like an SFP pattern, a swing failure pattern. Failed move equals a fast move in the opposite direction. And what did we do? We broke down and we pumped right back up to this blue trend line, confirming it as resistance. Now, like I said, normally traders sell volatility at the end of the week. So you can see volatility was sold over on the VIX. This is normally purchased back up on Monday. So this is just a normal stock market phenomenon. And while I've been away from the channel for the past 4 days or so, I actually posted my thoughts as they were developing on the market over on Twitter. You can see I posted this on May the 3rd, 3 days ago, and we talked about the microwave count over here while we were in that major breakdown. And we talked about how we'll probably bounce up to the blue trend line for a wave 2 correction very soon, before of course continuing the break back down to the downside. And you can see that is exactly what we did. We posted this roundabout here, and we pumped right back up. So this is looking, in my opinion, like a confirmed start of a new wave count, especially if traders start to buy back volatility on Monday. We might see that wave 3 all the way back down to the bottom of this trend line, around about 3,968 for the SP 500 very soon. This could mean about another 4% drop in the coming week or so. Also, just a quick side note, I did talk about this in my video that I posted 4 days ago, but if you didn't know, I have kendo training on Wednesdays to Fridays every single week, so I'm always away from the markets from Wednesday to Friday. Like I said, I did talk about this in my last video. I did tell you that I was going to be away for a few days, and this is why I always recommend that you do follow me over on Twitter, because I will keep you up to date. I will post if I'm away. I'll post what day I'm coming back. I will also post just before I start to upload YouTube videos, so you can grab your popcorn if that's what you want to do. But once again, make sure to come and follow me over on Twitter, because when I am away from the markets, I'll let you know I'm away from the markets, and also I will post my thoughts on the markets as they do develop. So if you want more of my content, if you're wondering, hey, it's been a few days, the markets are moving like crazy, if it's a Wednesday, Thursday or Friday, chances are I'm probably training and I won't be here to update you in the immediate short term. This is why I have a Twitter. But like I said, just a quick side note there, let's dive into the next chart. So like I said at the start of the video, smart money is really not interested in the market right now, and smart money is selling. We do have Bitcoin whales absolutely not interested in buying. We do have liquidity conditions failing, and for the smart money or the insider traders on the SP 500, we quite recently talked about how there was a massive spike in insider selling. Now you can see they sold right up here, round about 4,155, 4,160, and the market has started to come down since they did sell into the market. So we highlighted, all of these major spikes. Do bear in mind this chart over here only goes back for 1 year. We've been looking at this on the channel for quite some time now, so we do have all the data points of their previous sales and previous purchases in the market. And as you can see, red means they're selling, green means they're buying. They typically navigate these markets pretty well. A lot of the time they sell and the markets don't do anything for 2 weeks. They sell and the markets don't do anything for 3 weeks. But then, as you know, they're insiders. They probably know more than us in the market. The markets have been trading sideways for the past 3 or 4 weeks since they sold, but it looks like they're going to be starting to come back down to the downside very soon. If history is any indication, they time these markets very well. They also sold literally on the day or the day before that we had this bearish MACD cross. Now, I'll talk about Bitcoin in comparison to this as well in just 1 second. But as you can see, like we've been discussing, the major MACD crosses have been outlined over here. And a lot of people are saying, Bitcoin isn't actually following the S&P 500, but that is not true. If we overlay Bitcoin all the way to the downside here, I'm going to remove the MACD over here. I do just want to highlight quickly, these vertical white bars correlate to the bearish crosses over on the MACD. Now let's see what happened when the S&P 500 moved down after these MACD crosses. You can see we had a MACD cross here, S&P 500 rolled up and had a crash down, crash down, crash down, crash, 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 sideways chop, and then probably crash coming soon. What did Bitcoin do? Bitcoin broke down with the S&P 500 over here. Let me change my drawing tool to blue. You can see Bitcoin followed the S&P 500 in this move. We crossed bearish here. Bitcoin followed the S&P 500 back down during this move. Cross over here. This almost lined up to the top. Bitcoin continued to melt down with the S&P 500. This was the top for the S&P 500 right here. Bitcoin continued to break down and make new bear market lows with this move. I believe this was also the FTX collapse over here. But nonetheless, it was breaking down into this prior to this in the first place. Over here, you can see Bitcoin. Let me zoom in. A little bit hard to see over here. You can see MACD cross. Bitcoin went up and then went back down lower. The S&P 500 did the same. It went back up. As you can see, it topped out here. Bitcoin followed. S&P 500 went back down, Bitcoin went back down. Over here you can see bearish MACD cross. The S&P 500 literally got annihilated on that cross. Bitcoin had a dead cat bounce back up and then it broke back down lower. So a lot of the time, the S&P 500 is in fact a leading indicator for Bitcoin, and sometimes you get these mini divergences, like right here, where the S&P 500 had a mini bounce and the S&P 500 actually topped out right here on this red vertical line. And Bitcoin continued up for a few days, but as the S&P 500 continued to nuke, Bitcoin followed. And right now, the S&P 500 is in a pretty ugly space. We are still breaking down lower, tiny bit lower from that MACD cross, tiny bit lower since insiders have started to sell. And it's looking like Bitcoin is also probably going to follow in the path of the S&P 500 very, very soon. To wrap up the video, we do also have the VIX. Like I said, coming into the end of the week, traders always do sell volatility in the market in the S&P 500. That's why we saw that major back trace over on Friday for the VIX. If we come over to the weekly though, it did have a absolutely monumental bounce from the support that it found. If we look at this, you can see it had about an 11% close above, and it had a major move back up. Obviously, it moved back up while the S&P 500 was retesting this previous support flipped as resistance. And for the VIX right now, it's important to note that the VIX is at 560-day support. And every time it came down to this box and bounced. This is the S&P 500 down here. I'll change the color to blue so you don't think it's Bitcoin. The S&P 500 nuked, and as we've just discussed in the previous chart looking at the MACD, Bitcoin will soon follow with every bearish cross on the S&P 500. iShares TIP ETF, the final chart that I do want to talk about today. This is a great chart to understand when the S&P 500 will be going next. As you can see, the iShares TIP ETF broke down into new lows over here. It took about a couple of months or so for the S&P 500 to play catch up, but the iShares TIP ETF is a great leading indicator for the rest of the markets. And right now we are in a monumental bear flag, and for the past 4 or 5 weeks or so, you can see we have been dropping pretty significantly. Bear in mind, this is an S&P. We have been dropping pretty significantly. So all in all, the macro markets right now are looking very ugly. The S&P 500 looks like it's got lots of room to continue breaking to the downside. And with this, I expect Bitcoin will come down to the price targets, which we've been talking about in our last few videos. If I come over to the CME chart, where are our price targets? Yeah, really, this is kind of what I see. The CME gap down at 25,000, head and shoulders at 23,400, major CME gap down here at 20,300, BART price target at 19,500. All of this, of course, is really hinging on the fact that Bitcoin needs to have a bearish close beneath the 28,000 region. So yeah, like I said, the S&P 500 is moving down nicely since we predicted this nuke on the FOMC, but Bitcoin is the exact same price as when we predicted a dump. I don't think that we're going to diverge for too much longer. I don't think Bitcoin is in a healthy place right now. You can see smart money is not interested in buying. The NVT is super overextended. There's tons of retail volume here, but there is not strong liquidity conditions. And when that liquidity comes back, you might finally start to see smart money absolutely selling on the heads of these retail traders. So for today, my friends, that's all I've got. Bitcoin is looking very, very boring right now. So probably for the next few videos until Bitcoin makes a major decision here, I'm going to be focusing on some different perspectives on the SP 500 and also updating some altcoins which I haven't talked about in a while, as there's not too much to discuss for Bitcoin. If you do want me to update some of these altcoins like, Elon, GST, Solana, Ethereum, let me know in the comment section down below. I'll consider all of the comments, but yeah, I'll leave it here. If you do enjoy my content, make sure to let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. Also, make sure to follow me over on Twitter at 618_cowboy to get these notifications ahead of time. And if I am away from the market, of course, see my thoughts as they do develop. Here's also a quick sneak peek of what I'm going to be talking about in my next video. I'll leave it here. It's been your boy Cowboy Trades. I'm out. Peace.